Hi there, this is Hector. This will be about a 10-minute video. We're going to talk about some of the things to do at the end of the year, what 2021 might look like, and then some investment ideas that you might want to consider. So grab yourself a cup of coffee and or a soda, and then uh, join me. And I hope to make this very, very quick. If any of these things kind of is something we need to talk about, just respond to this email and give me some times and dates that might be available between 10 and 4 o'clock, Monday through Thursdays, and we'll find a time to make it work. So 2020 is ending. Whew. Didn't think this would come fast enough. It's been a really interesting year, and let's just hope we never refer to 2020 as the good old days or something's gone very wrong. Um, every year has some end of the year stuff that should be looked at and considered. And 2020 has taken that to a new level. Um, so we'll talk about that. The biggest thing is, well, now that the election is over and it looks like we're going to have a different president, what does that mean for the markets? And as we talked about last time, the markets tend to go up anyway, regardless of who's president. Here's from 1933 to 2018, how the markets have done. And so we can see it doesn't really seem to matter whether it's a Democratic president in blue or a Republican presidency in red. Markets tend to go up, and markets really like when there's one party in the Senate, in control of the Senate, and another in control of the House. So it's a good thing. I think we were set up pretty well for 2021. Um, Regardless of who's the president, historically stocks have tended to go up. And this is just another way of saying it. You can see that there's way more years where the market has gone up more than 30% versus years that have lost more than 30%. And this will be the first time that the market went down 30% and it looks like it's going to close at above where it started on January 1. So it's been a real roller coaster for historic times. So what can you do? What should you do? Well, first thing is avoid emotional decisions. Make sure we stick to the plan, make sure the plan still works. Let's review the plan, make sure nothing has changed, and just not make any kind of an emotional decision. Let's think things through. The plan will work if we work the plan. Revisit your risk tolerance. It's been a crazy year. If we were able to stick through this year and not panic, maybe you can take a little more risk because I don't think we're going to have years like this anymore. But, and we'll talk about in a bit, if we had a year such where you've made a lot of money or you've made some money and now we need to kind of rebalance the risk, we might want to think about that too. Um, while we're here, also think about checking on your beneficiaries, on your life insurance and your IRAs and your non-qualified plans. This is just a good time to kind of get all of those important things in line. Review your timeline, and if you're in your 50s or 40s and you're thinking about retirement, let's make sure that we're invested properly. But even if you're in retirement, and especially if you're in retirement, let's talk about how much cash you're going to need over the next year or two. And let's put maybe a year or two, if we can afford it, aside in cash. So if the market is down in 6 months and you need cash, we're not having to sell something at a loss. We've already planned for it. So review those kinds of timelines. Consider a tax strategy. And in 2020, we've seen some incredible things. A pandemic, an enormous voter turnout, which was really, really good, and a stimulus that we did earlier in the year, and it looks like they're trying to put one together even as we speak today. And that's a needed and necessary thing. So that's a very, very, it was a very good thing that they did. But what that done is has rolled our national debt to $27 trillion. That's a lot of debt. So common sense will tell you that at some point our taxes are likely to go up. And so this chart right here is, where tax rates have been from 1915 through 2020. And you can see there was a time 50 years ago or so, 60 years ago, where the tax rates were in the 90s. Now, granted, when they were in the 90s, the tax code was very different. There was things you could write off then that you can't write off now. But we're pretty historic lows here in the 30 highest tax rate right now is about 37.5%. So it might make some sense to think about trying to take advantage of that. And so when we look at 4 buckets of money, if you think about all of your money in 4 buckets, one is your taxable cash flow money. If you're working, that's your paycheck, right? If you're not working, that's going to be your Social Security and your pensions and all that money. That's just going to be taxed at income. But then you have taxable assets, things that are not in retirement accounts, just a straight brokerage account, maybe real estate. When you sell those assets, if you've had a gain, you're going to be taxed. That's going to be a long-term capital gain, which is usually lower. Not usually, it is lower than ordinary income tax. So that's a good thing. But then you have tax deferred assets, and those assets are usually your 401ks and your IRAs. And that's where a lot of Americans' money is. That's probably where most of your money is. And so one of the things to consider is to try to take money out of this bucket and put it into this bucket. That's called a Roth conversion. And that we're going to take money out of here and put it in there. And that's a good play. You just have to be real careful. What happens when you do that, if you say take 50,000 out of your 401k out of this bucket and put it in here, the reason you would do that is if you leave the money in this bucket for 5 years, that money is going to be tax free. That's a good thing. There's also no required minimum distributions. And if you don't know what those are, you will. And there's no RMDs for tax-free money. The bad news is that you have to pay taxes on that money when it comes out to be put in here. So that raises your taxable income. So you want to be careful when you do that you do enough not to bump you into another tax bracket, one. Also not to bump you into, if you're in 65 or over, make sure you don't bump yourself into the next Medicare Part B bracket where your Part B premium will go up. We don't want to do that. And if you've got kids in school, in college, you want to be careful because more income will mean less chance of financial aid on your FAFSA scores. So there's a lot of things to consider. Still a good idea to move some money from your taxable accounts to your tax-free accounts. But we just need to be careful as to how many you're going to do. And the other thing is, with the new vaccine, are there new opportunities? And rebalancing a portfolio is really, really important. I think we should do that. And the rotation in the market, which simply means that some of the stocks that have run well in the last year, especially with us staying at home, might not do as well as we start getting back and opening up the economy. So one of the things that I told you when you became a client is that I would always let you know what I was doing with my portfolio. I've always asked you not to ask me what I think, is to ask me what I'm doing. And so here's what I'm doing. I've added a couple of different stocks. Apple and Amazon, as you probably know, are still my favorite stocks. Hear me well. I still think that's the stocks that we need to own long term. They're in almost everybody's portfolio, but they've had a pretty good run, and especially if we've held them for more than a year or two. So it may be time. Don't do anything without talking. It may be time to take some of those profits, and if we want to rebalance that, then where do we go to? And here's kind of what I've done. Still, Amazon and Apple, my biggest holdings in my personal portfolio, but I've added a couple of companies that you may have heard about. One of them is a little company called Tesla. They have done extremely well in the stock market and the price of their stock over the last year or two. We've even put it into some of you that are more aggressive in your portfolios when we weren't sure what's going to happen. But in recent days, like in the last couple of weeks, Tesla's been added to the S&P 500 later in December. It will be added, and The reason that's a big deal is because most Americans still hold their investments in S&P 500 mutual funds or ETFs. And what those mutual funds and ETFs have to do is they need to keep 500 stocks in the portfolio, because there's usually not a fund manager. It's run all by computers. And so when Tesla comes in, there'll be a company, the 501st company, that'll go out. They have to sell that mutual fund has to sell that company and take its money and buy Tesla and buy a proportional share of Tesla. And Tesla's coming in as the 7th largest company in the United States. So there's going to be a lot of buyers. And when you have more buyers and sellers, prices go up. Remember your college econ 101. And so Tesla's a really good company. It's a leader in electric cars. I think less than 1% of cars in America are electric. So the potential for it is fantastic, but it's also a tech company, and they're developing some great technologies. And they're talking about having driverless cars, and they're talking about batteries that will last way more than the 300 or 400 miles that they have right now. So I've added Tesla to my portfolio for those reasons and more, but I think that that would be something to consider adding in your portfolio. The other company is Boeing. They make airplanes, and they had a 737 MAX that seemed to be having a hard time staying in the air not long ago. Turns out it was a software problem. They have fixed the software problem, and they're beginning to fly. They're just in the beginning. Of course, nobody's flying, so that's one of the bigger problems. But I think that Boeing is going to do really well. It was beat up before the pandemic. It was really beat up with the pandemic and when everything shut down. But as the economy starts to open and people start to fly, I think you're going to see Boeing as a manufacturer of planes continue to go up. Airlines need the Boeing 737 MAX because it's a much more efficient airplane, is my understanding. And so it'll cost more to keep it in the air. Cost less, and it'll be more profitable. So they really want to do that. And of course, now, hopefully as a gesture of good faith, the Chinese will want to buy some of these planes, and that'll be a good thing. So for all those reasons, I think that Boeing is a good place to consider putting some money to work. There are other opportunities out there. Obviously, cruise lines are ones that jump out because nobody's been going on any cruises, and they're going to come back. And when they do, they're going to come back with a vengeance, I think. You also have companies like American Express. You also have companies like Visa. So the companies that will do well in those kind of in the new environment, I think, are things to consider. So hopefully this video has given you something to think about. Maybe we need to have a conversation about something. Respond to this email. Let me know if we can do a Zoom meeting or a phone call, and let me answer some of those questions for you. And hopefully we can get this done. The Roth conversion deadline for all practical purposes is going to be about December 23rd or December 24th. If you already have a Roth IRA, that'll be easy. But if we have to open a Roth IRA to put the money in, it's going to take us a few days. So if you're interested in knowing, and we've got software that'll help us figure out how much you can take without bumping you into another tax bracket. Let's have that conversation sooner rather than later. Thank you so much for trusting us with your business. We're here for any kind of questions you may have, and I'm sure we will, but in case we don't, if we don't get a chance to talk to you, have a great holiday season and a very Merry Christmas. Thank you, and God bless.